name it, a variety of things, Dave. So I appreciate you taking time out of your day to join me for a live stream over here on RTD. But I want to start off by saying, how are you doing?
Not doing too bad, all things considered. And I appreciate you inviting me back on your show.
Yes, sir. Well, I appreciate you taking time to join us. And so as we give it a second, I want to make sure we have a couple more people tuning in. And then, of course, I have a gang of questions. But for those that are watching, feel free to ask questions, and we'll try to get those answered and go from there. And so let me make sure everything's streaming smoothly. I'm still waiting on myself. So I got a couple people in the chat here. So we're just going to plug right along. So, Dave, I'm curious to get your thoughts. I want to start off a little bit different. And so everyone knows the obvious. We see the health situation that's causing people to have to adjust their lifestyle. And then we're seeing the problems that's coming from the economy with all the policies and stuff like that. But outside of that, what are some other things? Is there any good news? Anything that has you excited, or anything that has you somewhat able to make sense of all this craziness going on?
Ooh, that's a good question. I'm not usually known for finding silver linings in the cloud.
Yeah.
I'm generally built for cynicism and skepticism. I guess, from the world that I operate in and the world that I look at and analyze, I guess if, one of the end results of this entire situation, crisis, is that it exposed the fact that the banking system, the financial system corruption was never addressed in 2008. I mean, 2008 could have been used as an opportunity to cleanse the system, and they didn't. They basically put lipstick over it, and the legislation that was passed that was supposed to prevent massive buildups and bubbles and reckless investing in the financial system got worse. Mm-hmm. And so, hopefully saner minds prevail this time around. I don't think they should be bailing out the banks. They're printing money and giving it to the banks. And the legislation Congress is passing, other than the direct $1,200 checks to people who qualify from an income standpoint, mm-hmm. Everything else is loan based. So it's like they're giving the banks helicopter money and everyone else has to borrow more money to try and get through to this. So hopefully this whole process will force a big change in our system and force a cleansing of the system and maybe rebuild it and fix the real problems this time around instead of letting them fester like they did or kicking them down the road like they did in 2008.
Yeah, I want to share something with you that I found to be very interesting when I came across this. And it's a report from, I think it was yesterday, but it talks about the leading doctor. Dr. Fauci says the world may never return back to normal after this outbreak. And so he goes on to share his thoughts into that. And so do you think, as a part of everything's going on now, that we may perhaps have a new norm after all this stuff unwinds? And then what might that new norm look like, if that is what you think so?
I'd be curious to know how Fauci would define normal, because I wouldn't say things were normal before coronavirus, mm-hmm. popped the massive bubble, systemic mm-hmm. bubble. That what we're seeing in the markets was starting to happen anyway, and what we're seeing in the economy now, obviously, the economy wasn't headed right off the cliff like it did once the coronavirus situation forced shutdown of everything. But it from all the data that I look at, a lot of aspects of the economy have been in decline since 2018. Corporate earnings have been flat to down since 2014. So I'd be curious how he defines normal, because quite frankly, I'm not too impressed with him anyway. And to me, he has the rotten smell of deep state all over him.
Yeah.
And to say something like that is ridiculous. He's a leader. If you want to call him a leader, you're supposed to give people hope. You're supposed to lead and encourage, not throw BS like that out there into the public.
Yeah, and so I would agree as well. And I wasn't going to say anything about that, but I believe he's also a part of a greater plan of he's on a vaccination camp, vaccinating everybody and data tracking everybody and all that, stuff that, I'm assuming that you would probably also agree. So that statement there was designed to, just so seeds into our mind as to what they want to do. And I've been looking a lot about, 5G and all that stuff like that. And I'm not sure how comfortable you are in talking about stuff like that, but there is a greater plan. And the plan is this new normal, I would imagine, it will be more restrictions on us, less freedom and all that things that usually come after events such as these. So I'm not surprised to see a statement like that myself. I want to now transition. So unemployment. There's another little article here we'll put up here. I got a couple articles, and as always, I'll take questions from the audience in a minute. But here's another article here that plays right into what we're witnessing and experiencing. It says 1 in 4 Americans have either lost their job or have pay cut from this shutdown, survey says. And this is as of today. Now, we were setting all-time highs weekly. Millions of people per week are filing for unemployment. Do you see this being how long do you see this unemployment record being set? Will it be the length of this health crisis, or will this stimulus injection be able to, help, ease some of the pain from a financial standpoint for people, rather?
Well, I mean, again, it depends on how you want to define unemployment. I mean, if you calculate unemployment the way the government calculated it in 1990, 1980, the real unemployment rate was much higher than the 3% that they were throwing in our face. So whatever they are saying is the unemployment number now, I don't believe it. Mm-hmm. And again, I don't think anyone is going to be able to really predict how long it's going to take to recover from this economically once things start back up, and how bad it will get. There's going to be, I mean, there's a lot of damage that's been done just by having millions of people not working for even a month. Let's just say we're out of work for a month. Mm-hmm. There's most households were up to their eyeballs in debt, and they're not making their debt payments right now. They're not getting paychecks in. They're doing what they can to put food on the table. And, who knows how bad this is going to get. And it's not going to be fixed once Trump says, okay, let's open things up. It's not going to be fixed right away. There's not going to be a V recovery. I mean, we're in a cycle of negative self-reinforcing feedback right now. And there's going to be a lot of small business. First of all, the small businesses are the economic backbone of the country. They employ the most people. And small businesses are one of the entities to which I'm referencing, that they have to borrow money to, corporations are getting direct payments, direct bailout money. They're making small businesses borrow money. I played tennis the other day with a guy who owns a trucking company, and this was Sunday, and he was working that day because he was getting ready to shut his business down. He said the auto industry is at ground zero. And he's applying for, one of the small business loan programs so that he can pay his employees, mm-hmm. For at least a month or two. And if this extends beyond that, those people are going to be without a paycheck.
Yeah.
So, I saw an article yesterday that said, there's potential that half of all small businesses close down. That's who employs people, the bulk of the people in this country. So we're going to have to just see what the fallout is from the small business sector. But, the money that the Fed's printing isn't getting to Main Street. It's going to the banks, and it's keeping the banks bailed out from their horrible, reckless derivatives and subprime type investments.
Yeah. Now, one of the biggest concerns, I think, after the last financial crisis we had was that the banks were the primary, they were too big to fail. So the policy was set up to make sure that they were liquid. Now, do you see this so-called small business loan that's funneled through the banking system as a way of making sure that they don't have issues first, the big banks? And because you said it's not reaching the small businesses. So is the ultimate fear still the banks themselves, the too big to fail banks, having issues? And do you think that's a part of the whole repo crisis that we were, that started back in September, was a part of the banks?
It's absolutely, the Fed saw what I was seeing in the economic numbers, and actually in default rates and things like that, the Fed saw a banking problem coming back in September, maybe even before that, and it wasn't repo; it was basically money printing.
Mm-hmm. Interesting.
You still there?
Yeah, I'm still here. Having a little choppy.
Okay, so there we go. It was money printing. I don't, they can call it repo, they can call it QE. It was money printing, and they were giving it to the banks. And what's even more shocking is that they also are using that money to keep hedge funds from collapsing. Because a hedge fund collapse and a bank's on the hook for that, and they don't know how big the problem is, on these, whatever these banks have off balance sheet and the derivatives and the interrelationships. There was a clearing member firm on the CME that went bankrupt, that blew up. I think it was maybe 3 Fridays ago. Mm-hmm. And then we find out a week later that ABN AMRO took a $200 million loss because that clearing firm blew up. Now, who would have known that there was a connection there between ABN AMRO and this clearing firm on the CME? So, that's the type of, I think the Fed and the central banks can see smoke coming from the banking system. They don't know where the fires are. So they're just throwing as much money as they can at it right now. And I don't think it'll work.
Yeah.
I think it's going to create massive inflation problems and currency devaluation problems.
I do agree. Now it's just a matter. So I have a question here that I want to share with from one of the viewers, and it says here, this is from Prabar. It says, "Ask Dave, at what point will a debt currency reset occur? We see all these central banks bailing out the corporations, printing money, and people with no work but infinite debt and inflation. And so, based upon the current activity of the central bank and their willingness to be overly accommodative to make sure that there's no hiccups, will this speed up that reset or reboot or restructuring or whatever they're going to try to do to keep this thing from going under, in your opinion?"
I mean, that's a really good question. I mean, at some point, there's going to have to be some sort of reset. There's been a gradual reset of the monetary system, for the last several years. I mean, Russia and China have been actively diversifying away from the dollar, not using the dollar in trade. I honestly, I have no way to know, on what time frame that we're going to see a reset or what it'll look like. I just know it's going to be painful for everyone, and the way to soften that pain is to make sure you own precious metals, physical gold and silver, because I think gold will be reintroduced into the monetary system. I mean, it already is to some extent, to the extent that central banks, especially the Eastern Hemisphere central banks, have been buying physical gold hand over fist. Mm-hmm. And that's what's led to some of the problems that we're reading about on the COMEX and the LBMA. Is those Eastern Hemisphere central banks have been sucking physical gold out of the London physical gold system.
Mm-hmm. Now, with that whole COMEX LBMA situation on sourcing bars, 100-ounce bars or whatever from the 400, and there not being enough weight actually out there, it looks like, or no one's willing to part with that, so they're going to settle with just paying out in cash. Can that continue to go on for a long period of time, or could that actually break the manipulation of them being able to rig the price still, or does it even matter?
I mean, as long as counterparties are willing to take paper for settlement, whether it's an outright cash settlement of contracts, which occurs, or these exchange for physicals that they call them. I mean, my understanding is, most of these exchange for physicals have been moving the COMEX contract settlement liability over to the London market. My understanding is a lot of those EFPs have been paid off or being paid off with cash at very high premiums to the current price of gold. Depending on how you want to define the current price of gold. But and then these new 400-ounce accumulated certificates of exchange. That's just another paper product. If you're long a COMEX contract and you're willing to take an ACE certificate for settlement, you have a derivative claim on gold that you don't even know whether it exists or not. I mean, yeah, they're telling you, oh, this 400-ounce bar is in JP Morgan's vault in London, but you don't own that gold. You don't. You have to have 4 certificates in order to take delivery of one of those bars, and it's not clear what delivery means. I was doing some research on it last night, and I happened to see, I think it was on the CME site, that if you actually wanted physical delivery of the bar, you needed to email. They gave you an email address at the CME to inquire about that. So I'm not even certain that they've floated these certificates with the intent that the bars will ever be delivered. It's just another way to fractionalize the bullion, the gold bullion system.
Yeah. Wow. So back to your average investor, your everyday saver. And so here's an article here I'm going to pull up here that would, I guess, draw a lot of question. It says, just this past week, the FDIC closes a small West Virginia bank, moves deposits to MVB Bank. And so this is the first bank that was basically had issues because of this whole health pandemic, as it was a cover up for it. But this is the first bank the FDIC has had to come in and bail out this year on a small note. Do you see situations like this picking up as bank branches are closing, they're laying off staff? They have, the mortgage issue and all the retail shops and stuff like that is going to be coming due now, and it's going to be probably a large amount of delinquency that these banks will be taking on as issues. Do you see smaller banks like this shutting down at a more rapid pace while the too big to fail banks hold on to all that, stimulus funds or whatever, that bailout money they've received already?
That's a great question. I haven't really thought about it, but I think it probably depends on the degree to which the government is willing to print money and give it to small banks to make up for the shortfall in mortgage and credit card and auto loan payments that is, invariably occurring right now. Mm-hmm. So that's a really good question. I don't know. I would assume that will be the case, that, unless they declare a debt jubilee and let everyone off the hook on the debt, in which case we'll see the dollar fall very quickly. It'll look like Wile E. Coyote going off the cliff. Yeah. That's an interesting question, and it's definitely worth watching, because I had not seen that small West Virginia bank had blown up and its assets were moved to, I'm assuming MVB is a large regional bank or something.
Yeah. And
so
the bank's 139.
That's something I'm going to have to put on my list, because it's going to be interesting to watch.
Yeah. Yeah. So they had 139 million in deposits will be acquired by MVB Bank. So it was basically they just took on the balance sheet of the bank that went under. And so I wonder what was the triggering point. Of course, no one knows. But one of my concerns is that we're going to see more events like that, as this thing unfolds.
Yeah, I agree.
Still in the beginning of April. And so it's yet to be determined how severe or how long this will last. But there's a lot of people out there that do not believe in the fact that they're creditors to the banking sector, commercial banks rather. And as of March 26th, I believe the FDIC, or the Federal Reserve, removed the need for too big to fail banks, especially, to have certain requirements for reserves for deposits, for capital for deposits. And then they also remove banks that are less than 10 billion as well. So as of now, there's no requirements for the amount of capital needed to make depositors whole. Now, so with that movement there, is that a part of them trying to cover up some of their losses as stuff unwinds, or what do you think?
Well, the reserve requirement, taking it down to zero, isn't really about the depositors per se. It's about having to come up with collateral or cash to use as reserves against the asset base. So, let's just say Bank ABC has a big slug of mortgages on its balance sheet, and all of a sudden, a lot of those mortgages are non-performing. So the value of those assets, that mortgage asset, is is declining, and the bank would have to put up more reserves to maintain the the 10% reserve ratio or whatever it would be against mortgages. So that was basically, the reserve ratio was a way to enable the banks to maintain more liquidity.
Yeah.
And also, I guess to some degree, I think it was designed to stimulate lending. Now, that's the last thing the system needs right now is more lending and more debt. But that's a good point about the fact that most people don't understand when you put money in a bank, the bank records that as a liability. So you're a creditor to the bank. Mm-hmm. And if you do get into a situation, we saw it in the S&L crisis in the 1990 era, when a bunch of banks went bust and the FDIC didn't have the money to cover it, and they created the Resolution Trust Corp, which was a way to liquidate the assets over time of these S&Ls and eventually get all the depositors paid back. But it took a lot of time for people to get their money back. So certainly the FDIC insurance fund is just a fraction of the amount of deposits at banks that could potentially go belly up. So that we'll see what happens. That's why I told people all along, only keep enough money in the bank to make your monthly bills.
No. Yeah, I agree 100%. Now, I'm curious to get your thoughts on the inability of people to actually go online right now and acquire gold or silver the way that we have prior to this last 30-day, 60-day run, because all the majority of the big retail bullion stores online now no longer have something in their inventory, or not much variety. So they say 20 days, give or take, 2, 3, 4 weeks, whatever they spend out there. One of my concerns, and I had Andy Scheckman on, and I put out the question of, do you think at some point the inventory will not be able to be sourced, depending on how connected you are, and then if they are able to put more on the shelves, the premiums themselves will probably even have to be greater than what they are now, because I would imagine as a business you probably will not be able to source it as easy moving forward. Therefore, you may not be willing to sell, perhaps, or at some point you get to the point where you don't want to sell it in Federal Reserve notes. Do you think that's a possibility?
Well, I mean, I think what we're seeing in the bullion market is Gresham's law in action. Bad money chases out good. So, people, retail guys who buy from the mints saw a crisis coming, and they rushed to buy as much gold and silver as they could while it was available. And I think I don't know if the U.S. Mint is actually up and running right now. That's probably something worth looking into. What's that?
I think I heard that they were not.
Okay, so you've got a supply bottleneck, because you got I think the Royal Canadian Mints shut down as well. So you've got both of those mints shut down, and I guess the way to gauge what's going to happen with at least retail bullion demand is we'll have to wait and see once the mints start operating again, and they can get a hold of gold and silver planks that they can use to mint into bullion products. So I think I read yesterday that there's maybe 3 refineries in Switzerland that are going to start operating on a limited basis.
Yeah.
And we'll just see, to what extent that might help fix the supply problem that people want to lead us to believe is going on in the gold market, or if those bars get snapped up as soon as they get produced and sucked away and disappear.
Ooh, interesting.
Either way, I think we're going to see much higher prices of gold and silver going forward.
Yeah, I do agree. And so we're only 4 months into the year 2020, and this year has turned out to be something that I'd imagine most people didn't see coming. I knew 2020 was going to be special, but I didn't think it was going to be health crisis special to kind of cover up everything that's happening under the surface. But as we get ready to draw back, as always, I appreciate you taking time out of your day to join us. let's end on a more positive note. Let's talk about some things that opportunities. And so once again, there's a crisis on the surface, but are there opportunities out there? And what are some things that your ordinary person can probably look for or educate themselves on how to take advantage of opportunities, perhaps?
I mean, when you say opportunities, it depends on what you're talking about. I mean, if you're talking about, investments, I think right now, and we're seeing it in the stock market still on days like today and yesterday and the day before, where there's still an overriding, prevailing amount of greed that is still in the markets, and you've got everyone's like, oh, this is the bottom. I'm going to be afraid to miss the next move higher, and they're piling money into the same overvalued stocks that were insanely overvalued before the market started cratering, and just some of these stocks, just because they're trading at 30% below where they were trading, in early February, it doesn't mean they're still not insanely overvalued. I mean, a lot of these stocks don't earn money, and they never will earn money. So, I mean, in my opinion, the opportunity is looking for things that are fundamentally and intrinsically undervalued, from a historical standpoint, and based on the various factors that underlie what gives that stock or asset value. And for my money, gold and silver are just fundamentally, intrinsically, historically undervalued, especially when you measure their value relative to the global money supply. And it follows from there that the mining stocks are historically undervalued relative to the price of gold and silver, where the price of gold and silver, I think, is going to go, just relative to the fundamental factors that drive the precious metal sector. So I think there's an opportunity there. It's too early to look for distressed opportunities, outside of the precious metal sector, because I think what we've seen in the markets, both the credit markets and the equity markets, going to get a lot worse.
Yeah, I do agree. And so, Dave Kranzler, as always, it's great to connect with you here on RTD. And so for those that may not know who you are, I want to put up your website here so they can find out where they can find you at, investmentresearchdynamics.com. And anything you want to leave us with outside of what you just shared as to how people can also connect and what type of services you offer and things like that.
I mean, I've got, my mining stock journal and my short sellers journal, and the mining stocks bi-weekly, short seller journal is weekly. And, there's the minimum time requirement is a month. If you don't like it, you can cancel after a month. I don't care. Well, I mean, I care, but I'd be sad that you had a reason to cancel, but it's not like you get locked in for 3 months or 6 months.
Yeah.
And, just in general, I think people should work on not worrying about things that you can't control, because there's no telling, what direction what's happening now is going to careen off into next week. Yeah. And I think, if you kind of just adjust your expectations and assume we're not going to see a V recovery, but there is going to be a bottom in our recovery, and hopefully our financial and economic system, our political system, and everyone will be a little bit stronger for having gone through this and made it through to the other side.
Yeah, well, I do agree as well. Dave Kranzler, once again, has been great. I appreciate everybody who's taking time out of their afternoon to join us and to chime in via chat. And there's a couple questions I didn't get to, but as always, hope to have you on in the near future and get your thoughts and analysis then. But other than that, everybody's been great hanging out. If you enjoyed this, give it a thumbs up, share this video, and we'll be back for some more live streams at a later time. Thanks, Dave.
Thanks, Mike.